Welcome to my SpaceX video conference. This is Natalie Pace, and we are going to be diving into the data. We're going to discuss those SpaceX and space ETFs that you've been bantering about, whether or not you should invest in SpaceX, when exactly will it get publicly traded, all this and much, much more. The prospects, Starlink, AI, all of the things that SpaceX is now embracing. We'll be digging into the data. Why has it lost money 24 out of the last 25 years? Is that a problem? What about all those insiders that have been investing for 25 years? Will that make the stock really volatile? Could it go down? Could it go up? Will Elon Musk be a trillionaire or not? We'll know all of this for sure by next Friday, but we can see what the crystal ball says when we clear up the data and really take a look, which is exactly what we're going to be doing in this video conference today. Just to recap, the roadshow starts tomorrow. What does that mean? Well, what happens before the stock is publicly traded is that SpaceX has to go, in front of a lot of different institutional investors and say, hey, this is what we think we're worth. And of course, the analysts at those various investment banks are going to kick back and go, well, we did all this data and research and stuff, and we either think that, yes, we'll pay that price, or no, you're way overpriced, and here's why. So there's a lot of dickering that can go around. And that's why we don't have an exact price or an exact valuation for SpaceX yet. By the time it's publicly traded on a week from Friday, on June 12th, we will have a price and we will know at least where it's going to start that day. It definitely doesn't say where it's going to finish up that day. We know that with the amount of losses that SpaceX has accumulated over the past 25 years, which is over $41 billion, and has been cash negative 24 out of 25 years of those 25 years, we know that there are a lot of investors who did invest pre-IPO, and those would be very wealthy people, a lot of private equity, a lot of investment banks, and that sort of thing, and venture capital. They are going to, this is what is called a liquidity event. So what they want to do is they say, hey, look, SpaceX is being valued at 1.75 to $2 trillion. It was worth a rounding error of that when I invested. I'm going to take some of that money and turn it into real solid cash, because stocks can be volatile. So the only question here is there going to be enough retail and Main Street investors to offset the massive appetite of selling that there is going to be? And that could be, because I must say, I've never seen more interest in an IPO since the Google IPO in 2004. So let's dig in and see whether or not you should invest, what the pluses and minuses are. And and I think this is kind of interesting, you might actually be invested starting on Friday if you have a targeted ETF. So we have looked at the iShares Artificial Intelligence ETF. It's called ARTY, ARTY, and it is very possible that SpaceX could show up there because there is artificial intelligence component to SpaceX. It is also exceedingly likely that it could show up in our TECB ETF, because that is a breakthrough technology ETF. So I am, I'm not just optimistic. I'm almost expecting that anybody who's been investing in those two hot slices will automatically own SpaceX. Of course, we will not know, and we may not know even if it is invested on that day or even pre-IPO, which those institutional investors can do. We may not know about it because it might not be updated in real time. It might be updated weekly, etc. But we will know about it pretty soon, and we certainly will be monitoring it and updating in the comments section of my blog. So this is the blog. Be sure that you have, this link somewhere handy, because I definitely will be commenting and letting you know updates. Okay, the pricing is coming in, and here's what it looks like, and here's the valuation, and blah, 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 those kinds of things. So the S1 was only filed on May 20th. So those of you who have been, getting emails from people before that. It was before they were looking at the financials. You couldn't really tell whether or not SpaceX was making money, whether or not its revenue was growing, any of that before they actually released their financials. Okay, and that just happened not long ago. Now, once the S1 was filed, before that, we were getting all kinds of emails, and I was saying, look, as soon as the S1 is filed, we'll do a blog. So I was able to, it took me 2 days to get through the very wieldy S1 filing and do my blog, which I posted on May 22nd. The roadshow for institutional investors, that should start tomorrow in the first day of trading, again, a week from Friday, June 12th. So these are the things that I want to talk about, and let's just dive in. The first thing is successful investing is a question of what, when, and how. What? SpaceX. Do I think it's a good investment? I'll just give you the cliff notes. Yes, I do think it is good to own SpaceX. However, not at any price, right? Not just like, okay, buy it now and then, what if it goes down in value? So let's talk about when, right? So what? SpaceX? Yes. When? We're going to talk about whether or not now is a good time to buy it. How? Should you invest in individual companies, or is a targeted ETF a better idea for you personally? Most people are better suited for targeted ETFs because they have just a few companies that are in this space. And by having a few rather than just one, it definitely helps to reduce the risk, and it makes it easier to rebalance once, twice, or three times a year. If you own SpaceX, and this is something that just happened to Boeing, so SpaceX, by the way, is not Boeing, and it is, we're going to talk about how truly magnificent it is in space exploration. But Boeing, in 2024, they actually had to leave astronauts on the space station, which SpaceX had to go and rescue. If you had SpaceX stock and that was SpaceX that had to leave the astronauts, or, and they do, look, SpaceX has blown up rockets. So there are things that can happen and that don't look that great for the company. When that happens, usually the stock will drop. If you have it as an individual company, even if the stock is eventually going to recover, you don't know how long that will be, especially if there's a recession or something else that mitigates it and takes it down further. If you have a fund and there are other companies in there, then it helps to keep the fund buoyant. So that's why for most investors, you don't really have the capacity, the bandwidth, the financial know-how. You're competing against pros on the other side of the table. So it is much easier for a retail or Main Street investor to invest in a targeted ETF because, again, if you invest in breakthrough technology, you're not going to get consumer staples or anything else in there. It's just going to be breakthrough technology. If you invest in artificial intelligence, that's what it's going to be. So you can get really targeted. And, your artificial intelligence ETF might include SpaceX and NVIDIA, a couple of the other companies that people really want to own right now. So I would say for most retail and most Main Street, individual investment is not the best choice for many, many reasons, but a targeted ETF could be a great way. And we'll talk about whether or not you should put it on a stock shopping list or buy it on a week from Friday. So there is definitely an Elon Musk premium going on right now. And he's capitalizing on it. And as of a week from Friday, he could be the world's first trillionaire. SpaceX will have to come in, I believe, at 1.6 trillion valuation or higher and stay there in order for him to be. Now, look, if it comes in for a split second, he'll be a trillionaire for a split second, right? But yeah, that's the number that they're looking for in order for him to be the world's first trillionaire. But with regard to SpaceX, again, this is a company that has only turned a profit once. That was in 2024, I believe. And last year, it lost $5 billion. And it's coming in they're saying, we don't know for sure yet. We will know, this next week we'll know a lot. And by next Friday, we'll definitely know what price it's coming in at. But they're saying 1.75 to 2 trillion at this point. It has 41 billion cumulative losses. That does mean there are a lot of insiders who are going to be wanting to turn their paper, you know, they want to be a billionaire too. They're going to want to turn their billions into cash, not just paper. And Tesla is another one that is worth 1.56 trillion right now, but it actually has been losing net income. So 2 years ago, Tesla earned 15 billion in net income, and in 2025, it was only less than 4 billion. That's because of the price wars and the Chinese electric vehicles. So if you, again, I want you to really refer to, I'm not going to go through all of these point by point by point because I did that in my blog. So I do want you to refer to the blog. I include the successful, qualities of a great IPO here. And I talk about it a lot more. But we are going to do a couple of things. So they are outstanding in terms of product, Rocket, Starlink, and AI. They have not outstanding sales growth. It's only 15.4%. However, they do have a new deal with Anthropic for their cloud services, which could be worth 15 billion. Now, that's not a lot of revenue when you consider it might be a $2 trillion company, but it is headed in the right direction. But it's still really overvalued. So in terms of price, you are buying high. Now, this is another thing. Impressive profit margins. Nope, that's not the case. I already said this, so I won't say it again, but they've had 25 years of operations, 24 of which were cash negative. And last year was another cash negative year. They do have a diversified revenue stream. In fact, they hope that Starlink is going to be the cash cow. And Starlink did have an increase in revenue of almost 50% in the most recent quarter, the first quarter. Their executive team is outstanding. Their board is problematic. So Elon Musk and the CFO and the president and COO, they've achieved enormous things. They were able to pick up the Boeing people that got stranded, the Boeing astronauts that got stranded. They were the first ones to recover the rocket boosters. So that used to be single use and cost multi-millions with every launch. So they have really been a game changer and proven themselves to be the leader in space exploration. Starlink was the first to get Wi-Fi to mobile phones in dead zones. That includes oil rigs, that includes, military applications, or even just people in remote areas of Africa and India that might have a mobile phone but not any other way of accessing Wi-Fi. So their Starlink is pretty amazing, and their AI is great. These are all outstanding products, but the executive team is to be commended because they did it. And they're even to be commended because with 25 years of cash negative operations, you got to borrow money. And that means that you're going to have to be talking to a lot of Wall Street people. And they convinced those people to loan them the money and then allow them to lead so that they could innovate. And that's really a trick, right? Sometimes the Wall Street people are too loud in the room and they don't know what they're talking about. And that can be a very negative thing. And that is a little bit of a concern because right now the SpaceX board, it's going to become publicly traded and it is very heavy in Wall Street finance guys and very light in actual technology expertise. Other than Elon, and they do have a Google executive in there, thank goodness. And the president is on there too, but the rest are all Wall Street insiders. So private equity, and that's a negative. Hasn't been a negative so far, but we'll see going forward. So again, outstanding management, noteworthy achievements, but the board has too many Wall Street finance guys. So the opportunities and challenges of space exploration is that, we have to note that, we have seen some notable problems. Virgin Orbit filed for bankruptcy a couple years ago. Boeing had that 2024 disaster. And of course, it is hard to turn a profit with space exploration because it's so expensive, and also because of its government contracts. And they're, of course, always trying to keep the profit margins low on that. So SpaceX has said, hey, what we're going to do then is we're going to make Starlink our cash cow. And as I said, revenue grew 50% in Starlink, and the satellite to mobile phone is a game changer. So they are very sticky. When someone subscribes, they don't want to get rid of it because there's not enough competition yet. And they have reduced costs by using argon propellant for their satellite thrusters. The challenges are Chinese and Russian competition are definitely heating up. They want to get that up there as fast as they can. There is only so much radio frequency spectrum available. Crowded low Earth orbit. You can see this rendition by the National Geographic of all the satellites that are in low Earth orbit. And I did do an AI search to see if there have been any collisions yet. They said no, but now there are so many satellites and other things in low Earth orbit that companies have to actively monitor it to make sure that there aren't any collisions. That's expensive, right? Because then you're going to have to replace some of those Starlink satellites, and they have a very short lifespan that has to do with being low Earth orbit. So it is a little more costly than most satellites are because they do have a lower lifespan. The challenges of AI. So the Anthropic Cloud Services Agreement is great. Data centers in space powered by the sun seems very smart, but it is going to have the same challenges that maybe the data centers are not going to have longer lifespans. We'll see. I don't know. I'm not obviously an expert in that arena, but low Earth orbit is hard on, on these kinds of things that are floating around in space. Other challenges are cash burn. So all AI companies are burning through cash. Google just borrowed a century bond. That means they borrowed money for 100 years. That's how far out they were able to do it, but how far out they think they need to. And competition is severe. There's just a lot of AI competition. And then, of course, deep fakes and liabilities are starting to pop up too. So we have yet to see the pathway to profitability for AI. It's still cash burn. And that's a problem, having two major cash burn verticals with only one, the Starlink, hoping to turn a profit. So here's the real challenge. SpaceX is great, but should a company that lost $5 billion last year be worth $2 trillion? Will the whales profit at Main Street's expense, like so many IPOs of late? And I did list a few of those. Uber is back, but most of these, Snap, Lyft, WeWork, Uber, all of them, the minute that they were publicly traded, they lost a lot of money, and 3 out of 4 of those did not recover. Let me just show you what that looks like. Now, you might say, oh, well, WeWork, that's not a great example of a great company. Lyft, not a great example. Snap, not a great example. But I would say I think that SpaceX is a stronger company than any of those by far. But the valuation challenge is a problem. So this is Lyft, right? Here's the IPO, and here's where it's traded now. So it started out at the $80 range. WeWork, you already know the disaster of that one. Even Uber, though, which is largely recovered, or recovered most of it, you can see here that it launched at 40, and it took it kind of recovered there for a little bit, and then it mostly has been underwater until, for the first 3 years. Now you might say, oh, well, I'll just hang on to it. But it can be really hard. It kind of depends too. It can be hard to hang on to losses and hope and pray that it crawls back to even. A better strategy, you've heard the Wall Street aphorism, is buy low, sell high, right? Or in our pie chart strategies, if you don't own it, dollar cost average into that breakthrough technology or that artificial intelligence ETF, so that if the price goes down, you're buying more at a lower price. And also have capture gain strategy with your once, twice, or 3 times a year rebalancing. So that is a buy low, sell high plan on autopilot. All right, so I think it's overpriced, and I think that for most investors, it's going to be a better idea to own it in those ETFs that we mentioned, TechB, TECB, and or RT. And we will talk about other ETFs that you've heard of, like UFO and NASA as well. So, macro considerations. This could be the late stage of the business cycle. Canada just announced a slight recession that wasn't predicted. There is no recession predicted for the US at this time. However, high gasoline and oil prices are highly correlated with recessions. You can see here these gray lines are recessions. So here we are with these very high oil prices. Now, even if the war at this point, if the war does end, soon, it doesn't mean that the oil prices will go down soon because of the global supply chain and the bottleneck that's happened. So it could take a little while for them to come back down. I mean, everybody's hoping they'll go back down to 60, 65 range at least, except for the oil companies, of course. They aren't hoping that because that's too close. They don't make enough money on that. So again, what SpaceX? Yes. When I would say stock shopping list, part of a targeted ETF. You may already own it the minute it's traded on Friday. Keep checking back on your ETF to see if it's part of the holdings. And also dollar cost average if you don't already have those ETFs. So again, volatility could be a major factor. I will be updating the blog in the comments section next week, letting you know what I believe the price is going to come in at and the valuation. I can't imagine that it's not going to be overvalued. That's just me, but you'll see that. Also, I do strongly suggest that you guys are following me on social media because I'm definitely going to be updating on Facebook, X, LinkedIn, and Instagram. So do check that out as well. And again, all of these little icons are going to just get you and just subscribe there. So again, TechB and RT, or TechB is the iShares breakthrough technology, RT is the artificial intelligence. The reason that I'm using iShares as an example is that this is a publicly traded company that is worth hundreds of billions of dollars. The NASA ETF and the UFO ETF are not publicly traded. We don't know how much capital they have. We don't know what they're worth because they're LLCs. And so their financials are private. That is risky. And I'm going to show you the poster child of why that is risky. And if you would like to know more about this, then join us at our retreat or email or whatever it is the way that you want to know more. But here's an example of what happens when you invest in a fund company, even if it's a great holding. So this is Gold Miners 2x Bull Fund offered by Direxion. And as you can see here, investors have lost a lot of money on this. And the reason for that is not that gold prices aren't high. In fact, if this is a 2x gold bull ETF, why isn't this one higher than gold, right? If we looked at gold prices, you're going to see, spectacular returns in gold, right? So gold is at an all-time high. So why is the Direxion at an all-time low? And the answer is because Direxion also had other leveraged ETFs and the fund company itself got into trouble. Then they start charging you all kinds of fees and you lose money. And so that is why the NASA ETF was started just 3 years ago. The UFO ETF was started in 2019, but it doesn't even have SpaceX yet. So if you're thinking that you would buy into this one and that you would own it, SpaceX, not yet, right? Here are the top holdings that it has. And that leads me to one other thing. We are going to be looking at some of the companies that supply to SpaceX. I have reached out to a few people who work at NASA to kind of help me evaluate that. I'm not going to give you my 2 cents before I do a better analysis on it, but that's an upcoming vlog for sure. And if you have a company that you think is supplying to SpaceX that you want me to include in that analysis, do email info@nataliepace.com. I'd love to do that. So again, TIMA's ETFs, the NASA fund, TIMA was only started in 2022. You don't know how well funded it is. The UFO fund, same thing. You don't know how well funded it is, and it only has two people on that particular fund company. So, a time proven 21st century wealth plan is age appropriate, properly diversified, for HOTS, right? You could have two HOTS of artificial intelligence, two HOTS of tech B if you want. It's your choice. That's why I say HOTS instead of invest in only this. You're the boss of your money. But the thing is about the pie chart is that it is a buy low, sell high plan on autopilot, and it takes the emotions out of it. So that's what I would be doing if I were you. If I wanted to invest in SpaceX, I would be making sure that I was monitoring ARDI and Tech B. If I didn't own it, I'd be dollar cost averaging into them. And if I did own them already and I hadn't rebalanced because stocks are at an all-time high, I would do my rebalancing now. And I might be actually capturing some gains before I own SpaceX. So you can get safe, hot protected in one easy plan. So creative disruption is great. These are a lot of things that are disrupting the status quo. Tesla was, a game changer, and it's worth more than GM, Ford, and Toyota combined. Apple put BlackBerry out of business. Nvidia is worth 5 trillion compared to AMD. So SpaceX is easily, it's the whale here. It's the winner for sure. But these trillion-dollar valuations can come down. I just want to remind you, in April of 2025, stocks lost 20%, but all of the Magnificent Seven had lost a lot more than that. And that wasn't because they aren't the best companies. They are. They were the most expensive companies. So when investors get a little skittish, they want to capture gains when they've made a lot of money. And in 2022, Tesla lost 67%, right? A lot, the ARK Innovation Fund, 67%. How do you protect yourself? Capture gains, rebalance once, twice, or three times a year. Have a percent equal to your age safe. So the pie chart itself is a time-proven 21st century plan that will actually do all this for you. And if you don't know how to do it yet, this is really what we teach at the retreats. So basically, we're saying, is the good news already priced in? It's very easy to make money, a lot of it, in a bull market, and it's easy to lose a lot in a bear market. And you should not be confusing a bull market with wisdom. These Wall Street whales, they know that stocks are at an all-time high. They know that there is an Elon Musk premium, and they are dancing on the ceiling that they are going to be able to capture gains at an all-time high. Now, if you're buying in right now, you're buying in very high, hoping that you will be able to sell higher, right? And that's different than buy low, sell high. And that's why dollar cost averaging doesn't have to be all or nothing. So stocks are very expensive. You may not understand this, but basically what it's saying is that the last time that stocks were this expensive, this is more expensive than the Great Depression. You might have heard about what happened to stocks then. This is almost as expensive as the dot-com recession. What a lot of people don't know, that was in the dot-com recession, the NASDAQ lost 78%. That's $1 million goes down to 220,000. That's a lot of money to lose. And then people say, oh, well, I'll just hang on to it. It took 15 years, 1-5, to crawl back to even for the NASDAQ after that recession. So it's really, real recessions are painful in the 21st century. The Great Recession was very painful for all those people that lost their homes, and stocks were dropped by more than half. Just to put it into context, right? The Dow Jones Industrial Average is over 50,000 right now. It dropped to 6,500 in March of 2009. That was 55% losses, and it took about 6 years to come back. So I wouldn't monkey around with these. And no, we don't expect a recession this year. But guess what? Economists never predict recessions. They're terrible at it. Nobody predicted the Canadian recession, and yet they're in one right now. So we have to ask ourselves, what can the company do? Well, SpaceX is going to do great. It has some game-changing technology, three verticals. What is the industry likely to do? Space is hot right now. However, and that's pretty great, right? AI is super hot right now, and Wi-Fi to your mobile phone is hot right now. So all of those are super hot. The only question is the value and what is the macro economy because people are hurting. And 70% of our economy is driven by consumer spending. So when people can't spend as much, that can be a problem, especially, and that's one of the reasons why we have recessions so highly correlated with high gas prices. So you may not understand what all this means, but you hear about the almost 40 trillion in public debt. What you don't hear is that there's about, it's more than this right now. It's about $109 trillion in total debt and loans in the US. So before you buy, you really do want to know what your exit strategy is. And before you sell, you want to know what the forward outlook and guidance is, industry, macroeconomy, et cetera. That's the least amount of babysitting you have to do if you own an individual company. It's easier if you own the targeted ETF because what you're going to do is once, twice, or three times a year, mock up a pie chart of what you have, mock up a pie chart of what you should have. We have free web apps for that. And then you're buying low and selling high. It really can be that easy, especially if you only have 10 ETFs. And again, that doesn't mean you just have 10 holdings. You are going to be more diversified than people with literally hundreds of holdings because you have hundreds of holdings too, but they're in an ETF so that all you have to worry about is the ETF instead of 100 companies, which no person manages. No person can manage 100 companies at the same time. An analyst would be responsible for less than a dozen. So again, get safe, hot, and protected in one easy plan. This is what you're going to definitely learn Friday through Sunday this week at our June 5th through 7th online financial freedom retreat. We'd love to have you join us. Again, email info@nataliepace.com. You can also access a link. Just go to nataliepace.com and click on the flyer there. You'll learn, the hours, the pricing, the 15 things you're going to learn, and all of that. And there's more information there. Preparing for retirement with your first job. So whether you're retired or you're just entering the workforce, you really want to know this strategy because wealthy people are not just thinking about themselves, they're actually thinking about 100 years ahead and behind them. And in doing that, you can keep more money in the family and stop making everybody else rich, including all the billionaires. That's going to be a game changer in your wealth plan, both for you and your family. And that's what this, preparing for retirement with your first job masterclass is all about. Also, I do want to invite anybody who is interested. Remember, you can get our free web app. Just email info@nataliepace.com where you can personalize your own sample pie chart. And okay, I'm going to show you on this one. We're also hosting a financial freedom game on Santa Monica Beach, and that is going to be on Sunday, June 14th. So if you would like to join us, we'd love to have you. You do need to email info@nataliepace.com so you can get directions and also get a game sheet that you'll want to print out and bring with you. So again, thank you so much for joining me today. Remember, this is free. You can share it with your friends. Happy to have you do that. Substack and YouTube, it's Natalie Pace. And, sometimes on like Instagram, I have to be Natalie Win Pace. So it's best if you go to nataliepace.com and access all of my social media there. It's also best if you are interested in my books, getting them at nataliepace.com so that you are assured of getting the most recent edition. The economy changes, and I do try to update my books when the economy changes so that it is relevant to today's world. So thanks again, and have a lovely evening.